how to forecast the financial market using the first Elliott Wave like a pro, part 2. How to forecast the financial market using the first Elliott Waves like a pro, part 2. Good morning, good afternoon, good evening, bonjour, bonsoir, mes amis, guten Morgen, guten Tag, guten Abend. For those of you who are new to us, we are the TSTW24 traders, and our website is www.24elliottwaves.com. The title of the video is how to forecast the financial market using the first Elliott Wave like a pro, part 2. I recommend to traders to watch the first part of the video before watching the second part, alright? Do not watch the first part without watching the full length of the second part. Otherwise, you are missing out, alright? In this tutorial, alright, I want to teach traders, okay? Once again, the challenge of using the first Elliott Wave to forecast the financial market. In the first part, we were talking about the shape and the form of the first Elliott Wave that can help us forecast the shape and the form or the price structure, so to speak, of the motive wave, or to determine the internal waves of the motive wave. All right. In this second part, I want to go a little bit deeper because there is a challenge that we face. So how do we identify, okay, the internal waves of the first wave at the first place? So if you are not able to identify the internal waves of the first wave, you are not even, okay, going to know the internal wave of the first wave, and you're not going to forecast the internal wave or the multi-wave. So there is a challenge, there is a work to be done. You want to develop that skill so you are able to identify clearly without blinking the internal wave of the first wave. Because my drawing is quite very simple, all right, but in real chart can be a little bit challenging, okay? How do we get to the bottom of, okay, determining or isolating the all internal wave of the first wave? Why do we care? Because if we get it wrong, our forecast is wrong from the beginning. All right. So if suppose my internal wave that I drawn here for the first wave is completely wrong, all right, then my forecast is wrong from the day one. So we talk about preliminary forecast. So you will do that very often. You will do preliminary forecast. So you will see very fast. Say, oh yeah, this is the internal wave. And then you look a little bit deeper, and deeper, you know that, okay, this is not exactly the shape and the form of the first wave. How do we do that? How do we, okay, bring out all the internal wave, the shape and the form of each individual minor wave or the first wave, all right? Very, very important, all right? The first thing first, you will first want challenge. So after watching the first part of this video, you go to your chart. So you see the first wave, here it is, it come out, and it's not subdivided into 5 waves. So you are standing there and say, George, what should I do? My first wave is not showing me the internal wave. I'm stuck, George. Your teaching is rubbish, okay? All right, so how do we handle that? As I explained to you in the first part of this video, sometime, all right, you may not see the internal waves of the first wave. So you are right to say you are stuck. All right, here it is. It just come out in one go straight line like this. So what's the forecast? Can you do here? There is a challenge. So suppose you see, for instance, so I want to give you another tips very fast. We usually count waves. All right, we can count wave on the 50-minute chart. We can count wave. These are the best time. I need to tell you that, okay? The correlation, we can count wave on a 50-minute chart, we can count wave on the hourly chart, we can count wave on the 4-hour chart or even 2-hour chart, we can count wave on the daily charts, all right? So these are the time that professional will use very often, all right? Okay, so now you count your waves, so you see the first wave, so it's just a straight line like this from A to B. So you see, here it is, A to B. You see, there is no internal wave, so what should I do? Okay, if you are, for instance, on a daily chart, all right, or on the hourly chart, or on the 50-minute chart, the first wave is just a straight line like this, okay? There's no internal wave. Okay, so there's nothing you can do. You're not going to invent it. You're not going to create it. All right, so it's not there. So what the professional will do, because they can't see it on one time frame, they will go to a lower time frame. So if we cannot see it on the hourly chart, we'll go, for instance, to the 30-minute chart. If you can't see on the 30-minute chart, we go to the 50-minute chart. If you can't see on the 50-minute chart, we can go even to the 5-minute chart. If we can't see all the internal wave or the first wave, we can go to the 3-minute time frame. If you can't see on the daily chart, we can go to the 4-hour chart. If you can't see on the 4-hour chart, we may go to the hourly chart. If you can't see on the, we go to the lower time frame. So if you are on a time frame that I call, for instance, time frame X, okay, you need to go to the lower time frame, to the time frame X. Sometime, by even going to the lower time frame, you may not see any internal wave at all. So there is no information to forecast the market. Well, that's it. But there is another way around that. Okay, so you can't see it. It's not there. There's nothing you can do. There's something else, a video that I recorded, okay, I think last year, about wave count by comparison. What do I mean by that? Pay attention, my friend. There is a wave count by comparison. So I'll give you one example now, okay? We know that the euro-dollar currency pair is negatively correlated to the dollar-Swiss franc currency pair. So if the euro-dollar is going up, the dollar-Swiss franc, in normal conditions, should go down. So here I am, I'm trying to find an internal wave or the first wave of my euro-dollar currency pair. I can't see it. I can use instead, okay, the dollar-Swiss franc. I will check whether I have a first wave for the dollar-Swiss franc. And then I will look at the internal waves, okay, of the dollar-Swiss franc. And I will flip it, which means because they go in the opposite direction, I will flip it upside down to determine, to have a bit of idea how the internal wave of the first wave of the euro dollar should be. Now, remember, this is a bit advanced for some traders, so we are doing wave count by comparison. Though we are trying to forecast one financial instrument, we are using another financial instrument that can give us a bit of information about another financial instrument. So one step, we can go to the lower time frame. If you can't see on the time frame that I call time frame X, we can go to the lower time frame. If it's not there, it's not there. We're not going to invent it. Okay. We can go now and use another financial instrument, either a financial instrument that is moving in the same direction or another financial instrument that is going in the opposite direction, and we want to check whether that financial instrument is also in the first wave, and we want to analyze the internal wave or the first wave of that financial instrument to have a bit of idea about the internal wave of our real financial instrument that we are examining. Don't get confused, my friend. It's becoming very interesting, okay? All right? So I can give you another example, wave count by comparison, all right? So we are trading, for instance, okay, a stock that is listed on the Dow 30, okay? All right? So we are analyzing Microsoft, all right? We see the first wave from A to B. We can't see the internal wave. Okay, now we go to we drop it down to many lower time frame to see whether we can see the internal wave. Well, we can't see it on the lower time frame. So we say, all right, so because the Microsoft stock is listed on the Dow 30, all right, I will use the market leaders of the Dow 30. For instance, Boeing or Caterpillar. I may see whether one of the market leaders is also in the same wave or first wave. Okay, if Caterpillar also has a first wave, I may analyze the internal wave of the Caterpillar or Boeing to have a bit of idea how the internal wave of Microsoft should be. But remember, this is not, remember when we are doing wave count by comparison, okay, this is not, do not assume that, okay, the internal wave of Boeing or the internal wave of Caterpillar should be exactly the internal wave of Microsoft. But it's helping us to have a bit of idea, okay, about the market, about the internal wave of Microsoft. We are using another financial instrument to forecast, okay, another financial instrument. Are you getting it now? So we can go, either we go to the lower time frame or we can use another financial instrument. But in that case, you need to be very, very prudent because you are not using, it's like we are using technical indicators that are giving us warning and the price must confirm the warning. Remember, so if you are using another financial instrument, know that it's another financial instrument. It's not a financial instrument that you are analyzing, but you are using another financial instrument as an indicator for that financial instrument. In that case, you need to be very, very cautious. If you jump ahead, you are likely to make a mistake. All right? Let's move on, my friends. So this is the challenge to dissect the internal waves of, the fast wave. There is another trick that we can do. Suppose we see the internal wave. Remember what I said? Preliminary wave forecast. So you say, okay, this is it, the internal wave of my first wave. And you are so happy that you have done it for the first time, especially if you are a new trader. So what I recommend to traders to do, you will draw two vertical lines, one at the beginning of the first wave, and one at the end of the first wave. So this is your internal wave. You draw it, you see that is it. And you do it like this, okay? The next thing I want you to do is to go to a higher time frame. Remember that we do not count wave on one time frame. It's a trading mistake. Check the video that we posted at 24 Elliott Wave 2 channel, how I validate my wave count, okay? So here we are, we draw two vertical lines, one at the beginning of the first wave and one at the end of the first wave, okay? Pay attention to the vertical line, and then you do it. Suppose you're on a daily chart, you count in wave, you see the first wave, you identify the internal wave of the first wave, now you want to make sure that it's correct. So this is your preliminary wave forecast, okay? Now you draw the two vertical lines, and now you go into a higher time frame. Remember, we go to the lower time frame if we can't see the internal wave. Now we can see it. But what we are doing now, we are trying to validate our preliminary wave forecast. So you will switch to a higher time frame to validate your wave count. I will not dwell on the wave count validation. I will refer traders back to the video that we call How I Validate My Wave Count Part 1, Part 2, Part 3. It makes sense? So you go to the higher time frame and see whether everything aligns carefully. All right? Because we want to make sure that our forecast, okay, is correct. Okay, at least, because if it's incorrect, our forecast will be incorrect. So we are looking at the internal wave of the first wave, which is a wave count exercise. We see the internal wave. Now we go to the higher time frame to validate our wave count. Okay, the manual wave or the first wave, we want to validate that everything adds up correctly. All right, using different time frame. Another thing that I want to add here is that sometimes trader will see a corrective wave and then we think that this is a multi-wave. You'll be amazed. Even some experienced trader will make that mistakes. How do we know that? How do we differentiate a multi-wave from a corrective wave? For instance, if we're talking about ABC, the flat correction, the C part of the flat correction, that usually fool traders to think that this is a multi-wave, the C wave of the flat correction. Sometimes they think that this is a multi-wave. It's not a multi-wave. Sometimes they will see 5 waves, say 1, 2, 3, 4, 5, but that wave is not an impulsive wave. It's a corrective wave, a C wave of a flat correction. So you don't want to conform a multi-wave to a corrective wave. You don't want to take a corrective wave in the place of a multi-wave. All right. So you want to make sure that what you are calling a fast wave is truly the fast wave. What you are calling a multi-wave is truly a multi-wave, not a corrective wave. So these are the exercises that a professional will do when they are trying to forecast the market. So preliminary wave forecast, finding the internal wave of the first wave. Now, next step, validating the wave and making sure that the first wave is truly an impulsive wave, not a corrective wave. Sometimes traders also get confused when we have a zigzag pattern. Zigzag pattern is formed of a 3 wave, 1, 2, 3, 4, 5. 1, 2, 3, 1, 2, 3, 4, 5. Sometimes trader will see that way 1, 2, 3, 4, 5 down. They will say that this is a corrective way. So they will use that to forecast the market. It's a corrective way. It's the A wave of the zigzag pattern. So when one is trying to find the internal wave of the first wave, one needs to be aware that some of the corrective wave may look like an impulsive wave, and traders should be able to differentiate between an impulsive wave and a corrective wave. All right? So in this tutorial, we want to identify the internal wave of the first wave. If we cannot see the internal wave, it's just the price went up from A to B, we'll go to the lower time frames. All right, go to the lower time frame. Watch our videos. I've posted a video before when I do the same exercise on the chart. It's not clear, we go to the lower time frame and then we may see the internal wave. Sometimes you may go to the lower time frame and you may not see the internal wave at all. There's nothing you can do. Well, there's another way. You can use another financial instrument which we call wave count by comparison. Using another financial instrument to have a bit of idea what the internal wave, the real internal wave of our financial instrument is likely to be. In that case, we need to be very, very careful because we are using another financial wave structure to forecast, okay, another financial instrument. Wave count by comparison. If you can't see, we go to a lower time frame. If you can't see on the lower time frame, we proceed to the wave count by comparison with caution. All right? The first internal waves of the first wave that we have identified, we shouldn't quickly jump and say that that's it, that's exactly what is likely to take place. We must now, next step, validate, okay, the internal waves of the first wave by drawing two vertical lines, one at the beginning of the first wave, one at the end, and then we switch time frame. So listen, if I'm on the daily chart, I count the wave like this and I see it, I may go straight away to the monthly chart to see whether everything aligns carefully. Now it comes down again to how to count waves. So the second wave should not cancel the first wave, the fourth wave should not overlap the first wave. We do not want to violate one rule when we're applying another rules. So you want to master the wave theory. You want to know the shape and the form of the 13 specific Elliott wave pattern. You want to know when and where, we are likely to see a zigzag pattern, where and where, we are likely to see A, B, C, D, E. So this is about the general knowledge, clear understanding of the wave principle. This will help us, to dissect or to isolate the internal waves of the first wave. All right? So this is the end of the second part of the video. We are talking about the challenge of identifying the internal waves of the first wave. If you cannot see, if the first wave is just a straight line, all right, we need to go to the lower time frames, different time frame, lower time frame, to see whether we can see the internal wave. Sometimes you will see it. You on a daily chart, you can see, you drop it down. You may see on the hourly chart. Sometimes you drop it down to the 50 meter, and then you start seeing them clearly. All right? Okay? Now, when you see it, you wait. Remember, once you see the internal wave, all right, you must now validate the wave count. Why do we need to validate the wave count? Because, a cycle, an Elliott wave cycle on a 50-minute time frame is a minor cycle on the 4-hour chart. An Elliott wave cycle on the hourly chart is a minor cycle on the daily chart, And an Elliott wave cycle on the daily chart is a minor cycle on the monthly chart, And an Elliott wave cycle on the monthly chart is a minor cycle on the yearly chart. So we need to go to the higher time frame to see the bigger picture, so you may know exactly that our preliminary wave forecast, is correct or not, or whether we need some changes. All right. If we cannot see the internal wave, we can also use wave count by comparison. We do not want to confound, a motive wave to a corrective wave. We wish you the very best in your trading, and until the next time, enjoy yourself and be very happy. I invite you now to follow me in the next part of the video when we'll be talking about how to forecast the financial market using the first Elliott Wave like a pro, a part 3. Happy trading to you all.